Alrighty, hello. Welcome to Weenie's Weekly Market Update, where I talk about what happened in the markets last week, and then I forecast what's going to happen in the markets this week, or at least the probabilities of different scenarios happening. So let's get right into it. What we're looking at over here is the SPY daily chart. So that means each candlestick, you see some red, you see some green. That represents 1 day of price action. So if we take a look at this, back over here, this is back in early December. And right over here is where we are right now. And this just tracks 401ks. It's a general marker of what a 401k looks like. So overall in the year, been lightly down, just about 16 to 17%. And if you guys remember last Weenie's Weekly Market Update, there were some bangers. And we were basically talking about how I don't see the market dropping anytime soon. And I actually expect the market to go sideways to slightly higher. Well, we actually went sideways first, and then we went higher. And we also just talked about how there's the CPI report. So we got our inflation. Basically, there's less inflation than was expected, but we still got a lot of inflation. So things at the grocery store, still expensive. Our gas prices are still expensive. And we're just trying to factor in if wages are keeping up with that sort of inflation. But overall, the market liked the news, and the market decided to rally just about 5-6%, which is huge because overall the market tends to average about 7% per year. It depends on which index or market that you're looking at, but about 7% per year. So for it to go up 5% in just 1 week, that was a really big green week for the stock market. We also talked about Disney earnings last week and how Disney, I'm expecting it to drop and it to fall out of favor as a large stock. And that's just because they're not utilizing their business model very well. Their margins are really low. They're not making a lot of money with Disney Plus. You guys aren't watching enough Disney Plus for them to justify their prices. The cruise line margins are still down. So Disney, huge drop. And if you guys paid attention, you were able to profit off of that, a 12% drop on Disney the day after earnings. We also talked about one specific stock to buy that can go up, and I noted Square stock. So this is the Cash App, if you guys recall, and I was saying Square stock is likely to go up about 10%. Well, Square stock went up about 12%. So that just means every $1,000 that you invested, you made $120. And $1,000, it's a lot to some people. It's not a lot to others. That's a normal investment for a trade for the majority of traders. So a very nice 12.5% trade. So cool stuff on last week's Weenie's Weekly Market Update. But let's talk about this week. We've been talking about Thanksgiving. We've been talking about retail over here. Well, this here is a chart of Target stock. And I really like Target stock. Not only because, I think it's a decently run company. It's a decently run grocery store. My fiance Bryce and I, we both shop at Target. We use the Target pickup where you can actually order on the app and then you can just show up. They fetch your groceries for you. It's all free. Try out the Target pickup. It saves you like half an hour to an hour on groceries. But either way, Target earnings are this week. So that just basically means Target, how well did you do in the last 3 or 4 months? Did you make more sales? How are you doing on your grocery margins? How many people are buying appliances? And so I do think that Target stock is a relatively strong stock that can do really well. But I don't really like the stock in terms of the price going higher. I really like it for what's called dividends. And dividends are basically just a thank you from investors, from the company. It's basically the company paying out to investors, every 3 or 4 months, however many shares that you buy of the stock, you get a percentage back. So Target pays a dividend of $1.08. So that means every 3 months for every share of Target that you own, they just give you straight $1.08 in cash, and you can do whatever you want with that dividend. You do have to report it to the IRS, but you can do whatever you want with it. And so that's why I really like Target stock in terms of shares, because the longer that you hold it, the more those dividends compound. So that's this upcoming week. And then in terms of the overall market, the SPY, since we are coming into a holiday week, most of the time during Thanksgiving, the market just goes sideways. So remember, we can go up in the market, we can go down in the market, but people forget that we can also just go nowhere. We can have very tight price ranges where nothing really happens. And so there are ways to profit off of this in the options market, but we're not going to get into that today. So basically, I'm expecting the market to go sideways for 2 weeks. Nothing too exciting. We'll have to reevaluate it after Thanksgiving. And one last little stock that looks interesting in terms of just a chart. I don't actually know this company really at all, but Nerds, NRDS, Nerd Wallet. This is a bullish chart that usually resolves itself a little bit higher. So NRDS, if it starts to come above a certain price level, that's what we call a breakout in Traderland. Prices coming above an area where sellers get smashed and taken out. 1350 seems to be a breakout level on NRDS. So that's all I really have for today's Weenie's Weekly Market Update. I did want to invite you guys to join me in a webinar that I'm going to be doing with my mentors, and that is on next Tuesday. It's about 7 days from now. Check it out. It's really awesome. I'm going to be talking about my background and my trading history. This is great for beginners, and it's just a lot of fun. So check it out. That's all I have in today's Weenie's Weekly Market Update. Thanks for tuning in. Let's get back to the show.